Welcome, everyone, to the MPS First Quarter 2025 Earnings Webinar. My name is Genevieve Cunningham, and I will be the moderator for this webinar. Joining me today are Michael Singh, CEO and founder of MPS, Bernie Blagan, EVP and CFO, and Tony Ballo, Vice President of Finance. Earlier today, along with our earnings announcement, MPS released a written commentary on the results of our operations. Both documents can be found on our website. Before we begin, I would like to remind everyone that in the course of today's presentation, we may make forward-looking statements and projections within the meaning of the Private Securities Litigation Reform Act of 1995 that involve risk and uncertainty. Risks, uncertainties, and other factors that could cause actual results to differ from these forward-looking statements are identified in the safe harbor statements contained in the Q1 2025 earnings release and in our SEC filings, including our Form 10-K, which can be found on our website. Our statements are made as of today, and we assume no obligation to update this information. Now, I'd like to turn the call over to Bernie Blagan.
Thanks, Jen. Good afternoon, and welcome to our Q1 2025 earnings call. In Q1, MPS achieved record quarterly revenue of $637.6 million, slightly higher than the fourth quarter of 2024 and 39.2% higher than Q1 2024. This performance reflected the ongoing strength of our diversified market strategy, consistent execution, continued innovation, and strong customer focus. Let me call out a few highlights from the first quarter. At our March 20th Investor Day, we showcased MPS innovation across a range of areas, including new opportunities in robotics, automotive, data center, building automation, medical, and audio. In Q1, storage and computing segment revenue increased 38% quarter over quarter on strong demand for both memory and notebook solutions. We continued to win designs across all major enterprise data customers, with revenue ramps expected in the second half of this year. Finally, Q1 2025 automotive revenue increased 13% from Q4 2024, the third consecutive quarter of sequential double-digit growth. MPS continues to focus on innovation, solving our customers' most challenging problems, and maintaining the highest level of quality. We continue to invest in new technology, expand into new markets, and to diversify our end market applications and global supply chain. This will allow us to capture future growth opportunities, maintain supply stability, and swiftly adapt to market changes as they occur. Our proven long-term growth strategy remains intact as we continue our transformation from being a chip-only semiconductor supplier to a full-service silicon-based solutions provider. I will now open the webinar up for questions.
Thank you, Bernie. Analysts, I would now like to begin our Q&A session. As a reminder, if you would like to ask a question, please click on the participants icon on the menu bar and then click the raise hand button. Our first question is from Tore Svanberg of Stifel. Tore, your line is now open.
Yes, thank you, Jen, and congratulations on a strong quarter, especially during this environment, and especially the cash flows. First question is on enterprise data. So it did come in line with expectations, but you talked about some second half design wins ramping. Should we infer by that this is sort of the low point for enterprise data this year?
Yeah, at this time, we feel, of course, when they're close to a second half of a year, we feel a lot better. And the overall numbers can be better. But at this time, we're not forecasting and how good is good. And so we have a lot more confidence than at the beginning of the year.
Great. Thank you. Yeah, go ahead, Bernie.
I think it's important to say that we're engaged with many different programs, either that we have the design wins or the qualification. So it's very broad-based, but as Michael says, while our visibility is improving, clearly the improvement is second half weighted.
Yeah, that's a good comment. And there's we do win many design have many design wins, and customers design it in, and we're just waiting for the ramp.
Great. Can I ask a follow-up?
Yeah, well, go ahead.
Yeah, so as my follow-up, Michael, I know over the last decade or so, you've been working really hard to diversify globally, whether it's R&D centers, manufacturing partners, and so on and so forth. I was hoping you could talk a little bit about those efforts, especially given the current tariff environment, and how are those efforts really impacting your position right now?
Yeah, that's a good good questions. Okay, started 10 years ago. We start to emphasize, okay, you have a local manufacturing for local customers, and the U.S. was out of China, so okay, particularly started the last couple of years, and okay, right after pandemics, okay, the volumes and we almost more than double our volumes, and we need to expand the fab capacities and the serendipities, and we all expanded in the outside of China. So, okay, and at that time the inside of China was full, and so now they give us a very good positions, okay, for outside of China for supplying the U.S. side, and as well as the inside China, and okay, so it's now that we're in a much better positions now.
Great, thank you for that. Congrats again.
Sorry, the only thing I'd add, right, from addition to the supply chain, right, the diversification approach has really been on the front end as well around R&D. So as we've been looking both the design and the supply, that's really been a hallmark of the strategy over the long haul here.
Yeah.
Great, thank you.
Yeah.
Our next question is from Quinn Bolton of Needham. Quinn, your line is now.
Thank you, and I'll offer my congratulations as well on the strong results and outlook. I guess, Bernie, Michael, maybe a follow-up on Tori's question just on enterprise data. I think you came into the year thinking enterprise data could be anywhere from flat plus or minus 20%. Sounds like you feel a little better about the business now. Wondering if you might be able to sort of tighten up that range on enterprise data. And then specifically, one of your large customers sounds like there may have been a platform change, and I think some investors are concerned that that platform change on their next generation GPU could have an impact on your share. And I'm wondering if you might be able to address just your thoughts about how you're positioned in share as you come into the second half of the year.
We were told by many customers we offer a breadth of a product that meets our customer needs. Okay, we don't comment on a specific customers. Okay, and we don't comment. And also, the matter of fact is we don't know. And okay, which our customers okay projects are going to ramp. Okay, or the changing as you said. And okay, and changing the schedules. And okay, these are out of our concern, and or we don't know. And it's their decision, but we have enough product, we can meet their demand, and we feel better is because our customers recently qualified many of our product from the IC levels or to module levels. They passed and okay many rigorous testings, and okay and they feel good about it, and okay we see some, so we feel good about it, and we we expected to have a ramp. So at this time, we not going to forecast what's a half years, and okay what in the past, and we said the last year we said that this year could be a flattish in our numbers. Let's see it, and okay. Let us deliver numbers. Hopefully, it's better than we expected.
Yeah, and I think that Michael is right that we have increased visibility because the design win and the qualification process is down down the road another month. But still, as far as when the actual product ramps occur is outside of our control. So while I think that we feel more confident overall, the timing as far as the plus minus against the range, let's leave it wide open for right now.
Yeah.
Got it. And then maybe a follow-up question, just Bernie, on the second quarter guidance. Looks like gross margin ticks down by about 20 basis points at the midpoint. Wondered if you could just sort of address that. Is that just sort of mix shift within the product groups? Are you starting to see either tariff costs and or pricing pressure? What accounts for the slight drop in gross margin in the second quarter? Thank you.
Sure. There's not a specific event that we're pointing to. We're just saying that there's a mix of different things that may or may not be inside of our control. And so we're just being basically 20 basis points more conservative.
Yeah. Overall, all the new product we release will have a higher margins. Okay, and the higher volumes, the margins is lowered. Okay, and but we now gonna intend to operate in much below our corporate average. That's our goal. Yeah,
we stay within the range.
Yeah, we stay with our model.
Yeah,
perfect. Thank you.
Our next question is from Ross Seymour of Deutsche Bank. Ross, your line is open.
Hi guys, congrats on the resulting guide. Thanks for asking the question. Bernie, in the first quarter, you had a very wide and divergent performance by segment to get you still to upside overall. Just wondered if there's any large segment moves in your second quarter guide, any kind of big divergent moves that you'd like to highlight?
No, actually, the range of variance for all of the groups is, plus minus 5 percentage points. So actually, we're seeing a very narrow change sequentially. And it's worth commenting there that, I believe that if we were heavily influenced by pull-ins, for example, that we might have seen a more dramatic fall off in a particular market segment. But when we look against particularly year over year, our strength is fairly broad-based with enterprise data, as we've talked about, still looking for the ramp in the second half of the year.
Got it. And I guess that leads to my second question, which was going to be something you kind of just touched on, which is the tariff side of things. I know you talked earlier about diversifying your manufacturing, and Tony mentioned about diversifying the R&D side of things. But as far as the pull-ins, push-outs, any sort of different behavior from your customers, I've been surprised how little of that has been admitted to or has actually occurred by some of the other analog companies. And so I just wondered what you guys are saying.
If it happens, some pushing a pull out, and pulling a pull out and a push out, and those are small numbers, small enough is that we don't clearly understand it. Okay, and the overall numbers very consistent. As you see it, well, Bernie mentioned that the Q1s and the computing segments and grow, the revenue growth, and so that's also as expected as from the previous quarters. We have a lot of design win in those areas, and we turning to our revenues.
And Ross, like in that area for sure, right? There's a lot of other, business factors beyond, just potential tariff related pull-ins, because there's AIPC, there's the end of Win 10 support, there's gaming. There's a lot of things that are driving the good business there as well.
Yeah, the key is the diversifications, and the best things that I can look at the numbers and I can't have any target number that I want to analyze. Okay, everything looks very smooth.
Got it. Well, let's hope it stays that way. Thanks, guys.
Yeah. Okay.
Our next question is from Rick Schaefer of Oppenheimer. Rick, your line is.
Thanks, Jen. And congrats, guys, on the solid quarter. I guess my first question, if I could, is really on data center or server power, rack power to be specific. You talked about your 400-volt rack power solution at Analyst Day. I think you highlighted like 600 kilowatts within a couple of years. I mean, we're seeing more in the press about even megawatt racks within the next, handful of years. So, I was just curious if you could elaborate on the expected market opportunity or TAM there, and sort of when rack power sales are expected to become material for MPS.
Yeah, our customer asked us to put in, I believe with this month, we start, if it's not this month, next month, we deliver samples. I think it's this month, okay. We deliver modules, each module levels are like 120 kilowatt levels. And for each modules, you add it together is somewhere is about 600,000 kilowatt to a million watt powers. And so we do have a product for that, okay. And well, we do have a initial developments, and now we have a samples, okay.
But Michael, not to press you on it too hard, but would we see revenues, like material revenues this year, or is this more of a, sample year, qualification year, and it's more of a 2026 revenue driver?
I believe it's a 2026, okay, and if we expected to have a higher good revenue come from that type of modules, and so the same times we are prepare our production ramps, okay, production qualifications, and there's a lot of work in the second half of the years, but we fully expected it, and we anticipated that part of the growth.
Thanks for all that, Michael. And then my second question is really on auto, and to me, I think you have several like material content drivers, ramping this year. You look at 48-volt transition beginning, 800-volt battery transition. You've talked about power isolation modules. I know you talked about that at Analyst Day also. I guess I'm curious, kind of a similar question in terms of like, how much do you expect BMS to contribute to that segment, to auto segment revenues this year? And I guess I'm curious if there are any regions favored within that.
Yeah, of course, China's model changes much faster than any other regions. But we do see in the US and Europe, even Korea, and okay, we're changing it, and changing not only from 400 volts to 800 volts, and also from 12 volts to 48 volts. Okay, and those segments, and okay, start very early. These are still early, at the very early stage, and we do ship those products now. Okay, to those segments. And I believe that all the early changes, okay, we're all in it, in every model.
Yeah, and I think in automotive in particular here, because we've heard some concerns about unit volumes from North American and Chinese EVs in particular. But when we look at our second half, a lot of the momentum will be design wins that we secured in previous years that are coming to market, particularly in North America and in Europe. So we have really, it's a content-driven second half story for automotive.
Yeah, but well, what you mentioned about 800 volts, okay, 48 volts, and those are probably we'll see a lot more in the 2026 and the 27.
Great, thanks you guys.
Okay.
Our next question is from Joe Quattrocchi from Wells Fargo. Joe, your line is now open.
Yeah, thanks for taking the questions. I wanted to follow up on your comments on the storage and computing segment. I can appreciate you guys are seeing some design wins ramp. I guess as we look forward here, just given like the abnormal seasonality, strength that you saw in 1Q, how do we think about that business kind of, throughout the rest of this year?
Are you talking about seasonality? I say, I don't know. Nowadays, okay, I've been in this public MPS being a public company of 21
20
years.
years.
Okay, and in recent years, I don't know what the seasonality is. And but we talk about the design wins in the memory side. Okay, in the memory part of the power management. And we're talking about it for the last year or two or so. And okay, and I think at one time I even said it. Okay, when it will ramp up that this year. And okay, I mean, but we don't know. And okay, these are kind of things plus minus a quarters. And okay, I mean, and the way you get it close to us, and okay, you get orders, and by the end of the quarter they don't push out. And now here's the numbers. Okay. And we're not very good at it, forecasting the numbers, but we're good at it. We're pretty good at delivering the numbers.
But I think a really important point here as well is that how broad-based this is. So we're looking at DDR5, SSD, even HDD on the memory side. And then, as Tony pointed out previously, that within the notebook, that there are a variety of factors that are driving that end market as well. So
CPU side, in the notebook side, the CPU side, desktops, and notebook side. And again, when Bernie mentioned all these segments, okay, these are pretty evenly growth. And okay, maybe memory side, and okay, the DDR5 is a little bit more than the other ones. And okay, and but they're pretty much okay okay, and evenly growth in all each segments.
Yeah, and Joe, just relative to what Bertie said before, going into Q2, everything's plus or minus a couple of points kind of thing. So you would infer from that segment would, not see a sharp fall off necessarily in Q2.
Yeah.
Yep, no, that's helpful. I appreciate it. Maybe as a quick follow-up, looking at the enterprise data side, maybe on the non-AI, segment of that market, how are you thinking about traditional server CPU demand this year?
They're doing good. And as you probably know it, and okay, all these a lot of servers have a refresh, okay, and adopting whatever the Intel's latest models, and we expected it, like as we said it at the beginning of the last year, year before, we will increase our market shares, and now, so okay, we're pretty much okay, and as we see as we said it, and years ago, okay, last year, okay.
And I think just to stay on that point for a little bit longer is that, again, much like the other areas of our business, we're seeing consistent, steady growth. It's not like a spike or a hockey stick.
We will gain shares, and the next years, things will even gain higher percentage in the server market.
Perfect. Thank you.
Okay.
Our next question is from Gary Mobley of Loop Capital. Gary, your line is now open.
Hey guys, thanks for taking my question and congrats on the solid first half performance. On the topic of China, can you give us a sense of how big your business now is in China relative to local indigenous consumption, and given your China for China manufacturing supply chain, how has that and how will that position you versus your larger U.S. competitor?
If you know our stories, and okay, this is okay, lot of design and a lot of design activities, and okay, a lot of manufacturing that happened in China 10, 15 years ago, and started 2016. We diversified, so not only from the U.S. Before it was the U.S. and the China, and started 2016, 17. We established place in Europe, multiple places since then, and And as I mentioned, before we mostly our manufacturing partners that's in China after the pandemic, so we migrated out by serendipity, I said earlier. And as a result, was the capacity within China. So we now, so I don't know how we gauge with our competitors. Okay, if there's any concentration, like concentrated in the U.S. for productions, or it's concentrated in China, so okay, in the current environment, neither are good. You need a really balanced, and in China, you're manufacturing, particularly manufacturing for China. So like in the U.S. is outside China, and the same as Europe.
Okay. As my follow-up, I want to ask about capacity and customer order lead times. It appears as though you have almost a half a year's worth of inventory on your balance sheet, and you probably have infinite manufacturing availability, at least in the intermediate term.
Not quite infinite. Yeah, so we have a lot. Yeah. Okay, go ahead. Sorry. Okay.
Okay. So my question is, have you seen any sort of uptick in customer order lead times? And related, has that improved your visibility or your backlog or any of those forward-looking metrics?
So as far as the inventory, let's take that on first off, is that we're a little bit, our model is to hold about 180 to 200 days on our books, and we're well below that level right now. When we look at inventory in the channel, we also see that is very lean against what we typically experience or what our model is. As far as the lead times, they're actually holding pretty well as far as what we're seeing in the supply chain. And as I've commented in prior comments, that in certain of our end markets, they do demand short lead times. And so we have to build ahead of their demand. I think, though, right now we have a lot of flexibility. We're very well positioned, regardless which way the market goes.
Yeah, if you know our when we targeted 180 days to 200 days, okay, for many years, okay, and because for all the new product ramp, okay, and in Q1, I don't know if you remember, as like I said, okay, in the inventory levels very low, both from a disti levels and as well as within MPS, okay, and at the very low levels, and okay, I may even said it, and okay, it was unhealthy levels, okay, too low, and overall, our strategy is we always hold more inventory than in disti, and we have a better management.
Thank you.
Our next question is from Joshua Buchalter of Cowen. Joshua, your line is now open.
I wanted to follow up on Joe's question from earlier.
Josh, you there?
Oh,
You can't hear. I cannot hear you.
Uh-oh.
Now it's better.
Yeah, we can hear you now.
No, now it's cutting out.
How now? Last try. Good?
There you go. We can hear you.
Okay. I'm sorry about that, guys. My first time on Zoom. I wanted to follow up on Joe's question from earlier on storage and compute. I totally appreciate the share gains that you mentioned, but the 38% sequential growth in what's usually a sub-seasonal quarter for PCs is certainly eye-popping. Are there any more metrics you can give us as to maybe content or share shifts that are going on, and to give us comfort that there's not inventory build happening here? Thank you.
Well, in the past, we have a few eye-popping numbers, right? Okay, so we didn't surprise it. Okay, I mean, as we said, okay, I mean, it's a pretty evenly growth, and in the segment particularly a little bit more in the DDR5s, as we said it a few quarters ago. Bernie, you want to?
Yeah, Josh, you might recall from my comments from year end when we were looking at the Q1 outlook, and I said that there was an atypical seasonal uplift anticipated in storage and compute. And against our internal expectations, we came in within low single digit performance to the upside. So while it may be counter to whatever seasonality we've experienced in the past, everything rolled out pretty much as anticipated.
Yeah, we have okay, go ahead.
Well, as I said, and Josh, just remember that storage compute, you heard Michael say it before, it's growth from both the memory side as well as the notebook side. So it's not all notebook driven. That might, apply to your seasonality question.
I'm a desktop. Okay. And here is we have always particularly in the last couple of years, and the market is very dynamic. Okay, and you see one segment is popping up, the other one segment is not so much, and in the last couple of years, you see more. This quarter's is storage and the compute. Last quarter, I don't know, the auto. Last couple of quarters, automotive. Right. Before was the
enterprise.
The enterprise. Okay, and we keep running like a circle. Okay.
Thank you for the color. And then I wanted to follow up on enterprise data also. You mentioned the increased confidence versus 3 months ago. Is that coming from your biggest customer in that segment, or is that more confidence in some of the newer platform wins that you expected to ramp in the second half? And within that, are lead times still measured in weeks? And when would you expect to, I guess, have more visibility onto the share in enterprise data?
Do it imply so we circle back? No, so we feel as the time as closer to the second half, we feel better. So as always, and we have a more clear visibility. Okay, Bernie. Okay.
No, that's exactly right. We've talked about this in the past. It's not just the main customer, but some of our other customers are operating with shorter lead times. And as a result, we feel very good about the design wins, the qualifications. And as I mentioned earlier, it's really the timing of when they expect to ramp. But even within that, we're getting, increasingly more confident.
Oh, yeah. You're talking about large customers, small customers. And okay. When we're looking at all these, they all can be very big.
They can all be big.
They all can be big. Yeah.
Well, congratulations on the results, and apologize for my technical difficulties again.
No, okay.
Thanks, Josh.
Again.
Our next question is from William Stein of Truist. William, your line is now open.
Great. Thanks for taking my questions, guys. Two topics. I wanted to hit on tariffs, and then I wanted to hit on some growth opportunities. On the tariff side, people have asked a bunch of different questions, but I wonder if you'd help us understand if there are any direct, as in unit costs and unit pricing impact that's influencing your Q2 guidance, and is there any indirect or unit demand impact influencing your Q2 guidance?
No to both questions.
Okay.
Yeah.
And then, at the Analyst Day, you showed some pretty unique products for a semiconductor company, these sort of finished full up products. As I recall, there was a sonogram. I think you threatened to list that on Amazon, if I recall. But also, building automation. You had audio amplifiers. I can't imagine that these are contributing meaningfully to revenue, but I wonder what your customer, either established customer or emerging customer reaction was to this. Did you see anything worth noting that could drive future demand that we'd want to think about?
All I try to do is, as Bernie said earlier, is we want to have a silicon-based solution company. I want to monetize our know-how. And for examples, and okay, I mean, building automations, the box we did it, and okay, and you add a lot of chicken shit stuff in the box. So we sell a lot of sub 50 cents, a lot of products, and okay, we add it together, and we put some softwares. Most of our products, it's the programmables, and okay, and now we're making MCUs, and okay, we put it all together. It can be a very good, viable solution sell for lot higher dollars. And same as ultrasound areas. And these are, to me, is very interesting. So, okay, we can leverage our know-how sell instead of sell $1, $2 parts. Now you start to selling some, okay, thousands, $10,000 stuff. And our customers, and sometimes, and they are related to our customers. And okay, our customers, okay, they buy. We're talking to a different level of people. We're not talking to an engineer anymore. So okay, we want to have a cooperating with the large companies. And okay, we have those solutions, and you can sell. You can buy the entire like solution. You can have it as like a white box. You label it, and or another way is you buy our modules, and rather than a chip. It just take much of an effort from their hand. And we do things because we do silicon. We do silicons, and then we can know the module levels, and we stretch it out a little bit with adding more softwares. And okay, it's the entire blown systems. And depending on the level our customers' interest, and okay, we can engage with them in the chip levels, in the module levels, on the system levels. And we just want to provide more. And that's our know-how. We leverage our know-how, leverage on the silicon. And I contacted several very, very large companies. They're the leader in the area. There's much welcomes to these kind of solutions. They want to work with us, and they want to work with us. And this is at the very beginning. That's kind of things that we're transforming a company from a silicon only to a solution company. These are the ones, and things that that's how from a silicon to module, we grow out of the silicon company. Then from a modules, and okay, we probably stay in the module level. We are never going to sell blinds and the shades, blinds and the air conditioning. We are not. These are still in the module levels.
Great, thank you.
Our next question is from Chris Caso of Wolfe. Chris, your line is now open.
Yes, thank you. A first question is with regard to the power for some of the custom AI projects this year. Could you detail how significant that is for the enterprise data segment this year, and maybe some idea of what the content is on that as compared to the largest customer in that segment?
So when I look at the opportunities, particularly with AI, the products are only getting higher power and they're getting smaller footprints. And it's that area of innovation where we can help lead our customers to their end solutions in a way that our competitors aren't. So, right now, the market has been dominated with really one main customer. And now as we see the second half of the year in particular, there's going to be a number of new market entrants. And they're all with the same formula.
Including a big and small.
Yeah.
And the small looks like going to be a big. So, okay. And the dollar content is it's in half years, and okay, a few $100 million. Okay, I mean, it's $500-600 million. It's not unthinkable for half years. Yeah.
Got it. As a follow-up question, maybe I'll dig into some what you talked about on the confidence on the enterprise data as you go through the year. And I guess maybe a little more detail of the why you feel a little more comfortable now as compared to where you were at the beginning of the year. Is it simply a matter of qualifications where you're now qualified on platforms that you may not have been qualified on at the beginning of the year? Is it, more confidence with regard to market share on those? Just a little bit of what is driving the confidence for the year as compared to where it was 90 days ago.
Well, the year is a half year then, okay, and now it's half a year, almost half a year later, and you'll feel the bad or feel good, and okay, it's all going to happen as we're getting closer, okay, and so we see the result, and okay, as we expected it, and okay.
Yeah, and say that we've got more positive data points that we can look at, but still how that converts in the year, that's why I mentioned earlier that we're operating within a range of outcomes.
Yeah, and just we always one thing we're good at in the look in the past. We're also pretty good at it. Do as we said.
Yeah.
Got it. Thank you.
Our next question is from Jack Egan of Charter. Jack, your line is now open.
Great. Thanks so much for taking the questions. So I was hoping you could talk a bit about the margin outlook for some of the new accelerator ramps in the second half and into 26 and 27. Is there really like a structural difference in the margin profile for those products going into custom ASICs and TPUs versus GPUs, whether better or for worse? I mean, really just any similarities or differences as to how that kind of long-term trajectory plays out would be helpful.
I wouldn't say that there's a structural change. Now you have individual opportunities that could be plus or minus.
Yeah.
So this market, but there isn't a fundamental change in our margin model because of it.
Yeah, MPS we want to operate it well within our model. We're at the low end, and we're very much aware of that. And we want to do is we're not going to high volumes, low margin business. Doesn't matter what area. And all these new products I said earlier, we release, okay, we all have a higher margins. And we want to stay on the best performance. We're not competing on the price.
Okay, got it. Thanks. That's helpful. And then I guess for my follow-up, as it kind of relates to just the broader analog cycle across end markets, if you kind of strip out Monolithic's, new design wins that are ramping and share gains, are you seeing any signals that, end demand broadly in maybe some of the more downtrodden markets is starting to increase? I mean, I'm not sure if you can really separate those factors out, but if you're looking at markets like automotive and industrial, is there anything that gives you confidence that maybe those markets are actually turning around?
I think for MPS, it's impossible to strip out the revenue ramps from new products. I know that we've had a competitor or two that have announced that they've seen a bottoming out or potential improvement. Again, our story has to do with the new product revenue ramps. And in particular, we've talked a lot about the second half as far as enterprise data, but I don't want to ignore all of the other opportunities in all of our other end markets. So we feel very well positioned, regardless of the macro, for both the second half of this year as well as the momentum we're carrying into 2026.
Yeah, if you know the history, for 21 years as a public company, we only have 1 year, 2010. The year we didn't grow, we missed $3 million. Every year we grow.
Right. Okay. That's super helpful. Thanks so much.
Okay.
Our last question is from Kelsey Chia of Citi Research. Kelsey, your line is now open.
Hi, Michael and Bernie. Thanks for taking my question. So I'd like to dive deeper on the gross margin side. So it seems that legacy wafer pricing is trending down, and also you're talking about new ramps in enterprise data and auto. So is there room for gross margin expansion going forward in the second half?
Of course, there's room for gross margin expansion.
For second half, no.
Second half.
Yeah, we're not going to increase the price to our customer. Okay, for next year's, that's very possible. Yeah.
Okay, right. And I'll also like to tap into on the communications end market. So I believe that segment is also benefiting from the AI infrastructure buildouts. I believe on the optical module side. Could you provide more color on those applications, and also when can we expect sort of like a similar ramp to these enterprise data, the second half uptick for this year?
Sure. It was interesting because the way we look at our communications market is we have obviously the network telecom exposure. We have, the router wireless modems, and more recently we have optical fiber optics. And I would say that when I look at the last 2 quarters and the outlook for Q2, it's been very balanced. It hasn't been, weighted by any one component. And that's what we're seeing. We already talked about that as far as storage and computing, and in automotive in particular.
Okay, thank you.
Yeah. All right.
This concludes our Q&A session. I'd now like to turn the webinar back over to Bernie.
So I'd like to thank you all for joining us on this conference call. I look forward to talking to you again during a second quarter 2025 conference call, which will likely be held in early August. So thank you. Have a nice day.